Now we move on to the next part, which is the seller stamp duty is also just nice that ties in with what we call the blackout period. So in the blackout period, this concept here is essentially what we call when you're a buyer and investor, right? One of the very common things is you always check your app and see whether that stock that you bought or that crypto ticker that you bought has gone up or now. And then you're emotionally driven based on price movements or news announcements, and you probably are triggered very emotionally. You might intend to continue to hold or sell, right? So this is a very investor emotionally driven decision, which when you buy a property, right, the good news is you don't have or you wouldn't be subject to such emotional factors. It's what we call a blackout period, because when you buy a property in Singapore, the regulations are today you need to minimally hold your property for 4 years. So you buy already, you cannot regret it. You also won't go and offload your property for no reason. Right? You minimally will hold for 4 years, and most buyers I meet, they won't keep checking property price. They also won't keep checking for no reason. So that is normally how people operate. And then they come to maybe 3 to 4 years later, and then when they want to decide when the property is nearing TOP, just nice a TOP also takes about 4 years, and then they move in, they tie in together with the seller stamp duty period, as I mentioned here. So at this stage, it's what we call a blackout period, where normally over time, over 4 years, your property will appreciate. So you allow yourself not to make any intermediary short-term knee-jerk reactions that a lot of short-time investors, they make and then they end up regretting offloading or whatsoever. So this is a concept of what we call a blackout period, which is actually very beneficial for why property prices continue to go up, because our buyers today have what we call a holding period. And 3 effects that happen during TOP, I mentioned heavily in my last few slides about the concept of progressive payment. That's really in the investment term called dollar cost averaging. You're really not going front-loading everything that you have right at the onset. You are progressively paying while your property is appreciating at the same time. This is actually very beautiful compared to other asset instruments, investment instruments. The second thing is that you at TOP, a buyer is actually have the options of either one of these 3 things, which is either to move in, to rent out, or to sell. Okay, and then I think the most important thing in the third one is you realize that, I've been talking a lot about you can either buy a new launch or resale, but what a lot of buyers actually realize at the end of the 4-year mark, what they end up is resale unit that's ready for move-in, brand new, and ticks a lot of the criteria that a new resale condo buyer looks for, but in a brand new setup. So you are actually creating a new asset class for this pool of people. Last but not least, let's talk a little bit about this first mover. You might have heard a lot about it online, multiple sources of information that's been given to you, but here is the few slides that you'll be actually going down deep into the numbers and past examples. So as a first mover, actually there is generally an advantage where you get to enjoy the life cycle of any property. So typically when you enter into the onsets where you go into the pre-launch exercise, you buy direct from developer, assuming that you have a good ballot number, you have a chance to buy. Typically that's when a lot of buyers enters the safest into the lowest pricing possible. That's also when the premiums are at the smallest, and there's a very, very strong support of early demand. So that's what we call phase 1. And over time, we go into the phase 2 where prices, they gradually move up. Okay, they don't move up ridiculously. They gradually moved up maybe about 2 to 5%. Usually this happens when you're in your 6 months to a year kind of setup after the pre-launch. And last but not least, when you go into the phase 3 setup, which is probably nearing TOP, that's when the developers really adjust their pricing a lot higher compared to launch day, because they're also targeting the emotional buyers who really have a bigger need compared to the ones. So when you have a bigger need, you need something to move in immediately. You need something that's ready, don't have to rent so long. That's where buyers are more willing to pay because it addresses their pain points and needs. That's where your opportunity is as a new launch buyer. If you're entering in this segment here, that's what a lot of buyers look at. When they enter into the new launch segment, they are looking at the growth here. So I'll give you an example for Sterling residents in 2019. Okay, a lot of buyers, when they bought into this property at say 1,007 PSF, back then 1,007 PSF for this kind of location was perceived as very expensive. On hindsight, wish I was one of those buyers who bought it. In today's transactions, Sterling is very, very strong and already doing at about 2,000 in 4 years later. When the prices have already been staged up. 4 years after launch, the prices actually have gone up to 2002 PSF. So this is what we call the unfair advantage as a first mover. Okay, so as I mentioned earlier, so this is normally what happens. There's a 3-phase price positioning of new launches. So generally, a lot of buyers, they look to take advantage to be the early bird in the first mover. Some more examples like Midtown Modern. If you look at the 3 different phases, those who entered into Midtown Modern in 2021, okay, March 2021 at about 2003, 2004 PSF, and then just shortly after 6 months later after launch, the prices has gone up slightly to 2005, 2006 PSF, and then 3 to 4 years later in 2022, it's gone up to about 3000 PSF. So this is generally about $600 growth from day one. We see buyers actually making paper gains of about $700,000. An outskirts example, a 2-bedroom in Lentor Hills in launch in 2023. At the point of time, I still remember I was also one of the buyers who, like, one of the agents serving buyers, and was wondering to myself, for Lentor location at 2000 PSF, are you sure or not? So in July 2023, what I also observed is that a lot of people are willing to absorb this price at this location at the point of time, 2000 PSF. And then phase 2 come 3 months later, we see that actually a lot of buyers, the pent-up demand for this location because of certain characteristics, they are willing to actually buy this at about 2001, 2002 PSF. That's where the developer also took advantage and adjust the pricing. And come closer to 2024, we see that buyers eventually all willing to settle. The developer actually increased the price all the way to 2004, and buyers even accepting this price. So what that means is, for the first buyers who bought in at day one, right, this is about $400 difference and paper gains of $200,000 for them. A lot of other different examples. This is a 3-bed Martin Modern in the core central region. Same concept, phase 1, phase 2, phase 3, starting from 2000 PSF all the way to 3000. So this is like a $900 differential, people making paper gains of about over 1 mil. So giving you different kind of examples for outskirts, city fringe, and core central region of different kind of bedroom sizes. Generally, the first mover advantage applies regardless of which market segment you are in or which bedroom type you are looking at. Basically, this is the same example for Sterling, a client who bought into Sterling at 1006 PSF. Today, 2025, he's exiting at 2003 PSF. So that's a 40% uplift, translating into a $500,000 profit for just 2 bedrooms. So these are the kind of logical outcomes that happen when you take the first mover advantage. And last but not least, I would like to cover the third exit audience, okay, which I mentioned. So today, if you are a buyer in this segment here, okay, you are a new launch buyer buying into a property that's brand new, start of 99 years, and 4 years later when your project TOP, your lease is left with 95 years. Versus today, if you are buying a resale condo where you are selling 4 years later with a lease at 66 years. Put yourself in your potential future buyer's shoes when he's browsing the property guru, he's looking at a property to buy. Potentially, how would your property be positioned for your future buyer? Think about it. A lot of buyers, yes, they will appreciate how renovated your house is. They will appreciate how spacious your house is. But the fundamental fact is that they're going to put $2.5 million into your house. They also worry what is the value of the property going to be when they acquire, what are the potential risks involved when they buy a property 4 years later. So these are the things to take note of. So the potential buyer, bonus buyer audience is that when you buy a new launch property, what you end up with is a third bonus audience where buyers who want brand new properties, but they cannot wait. They're okay for not being the first mover. They just need a brand new property because they have an immediate need to move in. So they are the kind of resale buyers that have an immediate need but really needs a brand new property. They're okay with not being a first mover. They can be a second mover. They can buy from someone else. Doesn't have to be the developer. So this is the bonus audience that you're actually able to target when you actually buy a little bit property. Okay, this is what we call the TOP sub-sale buyers. So to wrap up, allow me to share with you the big picture why new launches, despite the challenges, it still continues to shine year after year. Beginning with a fresh start, a fresh new 99-year lease, I think ultimately is still one of the main drivers why buyers still end up buying a property. They feel safer with a property that has a longer lease when they exit next time 4 years later, with how condos are looking to this new setup. Because if let's say a buyer is buying for own stay, there's always an emotional element that I want to buy somewhere that has a more modern setup, more equipped with good facilities, and then of course not having some place that has to keep breaking down and under repairs and all this sort of stuff. And last but not least, which a majority of the people, because we can only own one asset today, we are not able to have the luxury of owning multiple assets. So the very own property that we can own, we want that to have a potential for growth, which I mentioned earlier and demonstrated and illustrated with a couple of numbers in the tables. New launches properties still shine because of that higher potential for growth. Okay, so for resale, while you get immediate occupation, what you might end up also have is you inherit a higher renovation cost and properties that don't keep pace with the appreciation of newer projects as well. Okay, so today it's really about a new launch versus resale conversation. If you're looking for frameworks to spot profitable investments or spot undervalued properties with clear exit strategies, there are other frameworks that I have. Please feel free to watch my other videos. If you like this video today, please feel free to like, share, and subscribe. And then that's all for today. Thank you very much.